Welcome. In this video, can XCN go up 6,800% and make a new all-time high? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
First, it's important to talk about the falling wedge pattern on the chart, because this structure is quite significant in technical analysis and is known as one of the most watched reversal signals by investors. A falling wedge generally indicates that the price is moving within a narrowing downward channel, where each swing creates lower highs and lower lows, but with weakening momentum. While at first glance this structure may look bearish, in technical analysis, the falling wedge is usually considered a bullish reversal signal. That's because when the price breaks the upper boundary of this pattern, the likelihood of a strong upward move increases considerably, especially when supported by volume. This breakout tends to be more powerful and often provides a buying opportunity for investors. The price moving within a falling wedge also has major psychological implications. Each new low causes more fear among market participants, but in reality, this fear reduces the number of sellers while buyers patiently wait for a stronger position to enter. In other words, the internal dynamic of the pattern represents sellers getting exhausted while buyers prepare to take control. That's why a breakout to the upside signals relief, both technically and psychologically. An asset that has been under heavy pressure for a long time can gain value rapidly after such a breakout, as the built-up buying pressure is released all at once and accelerates the new upward trend. To understand the falling wedge, one must look closely at price behavior. We see that each low forms slightly lower than the last, but with weaker downward momentum, showing sellers losing strength. Meanwhile, the highs also decline, but the pace of decline slows, reflecting buyers beginning to step in. The critical moment for investors is when the price breaks out of this tightening zone to the upside. At that point, it becomes clear that sellers are nearly powerless and buyers have taken control, which often leads to sharp rallies. There are also target levels associated with a breakout. A common method in technical analysis is to measure the widest part of the wedge and project that distance upward after the breakout. This helps traders set potential profit targets. Volume confirmation is also essential. If volume increases notably during the breakout, it confirms the move is genuine and sustainable. On the other hand, a breakout with weak volume may turn out to be false, leading the price back into the wedge. This makes volume a critical indicator of breakout reliability. Another key point is that the falling wedge often forms at the end of a downtrend. After a long decline, the price builds this pattern and then signals a trend reversal with an upside breakout. From this perspective, the formation acts like a beacon of hope for investors. Those who have suffered through prolonged losses regain confidence, while new investors are encouraged to enter the market since the breakout is considered a clear technical signal. The falling wedge not only reflects price direction, but also illustrates market psychology. As the price narrows downward, it's like a spring being compressed. The tighter it gets, the stronger it releases when let go. Similarly, once the breakout occurs, the price often surges upward with significant strength. Recognizing this pattern can therefore serve as an early warning of potential rallies. Patience is critical here. During the formation, the price may move sideways to downward for a long time, tempting impatient traders to exit or make poor decisions. However, the logic of the wedge is that the downtrend is nearing exhaustion and those who remain patient are rewarded. Thus, the falling wedge is not just a technical setup, but also a strategic waiting game. Investors who interpret it correctly gain a clear advantage in the market. Additional indicators can help forecast how price will behave after the breakout. For example, momentum indicators like RSI often show bullish divergence before the breakout, where price makes lower lows but RSI trends upward. This signals weakening selling power and strengthening buying activity. Therefore, combining the wedge with other indicators increases the reliability of the breakout. Market structure also plays a role alongside psychology. Traders who buy at each lower dip hold their positions during the breakout and see their profits grow as the price rises, fueling more upward momentum. Meanwhile, short sellers who continue betting against the trend get stopped out and forced to exit, which adds even more buying pressure. So the breakout not only attracts new buyers but also removes sellers from the market, amplifying the rally. In conclusion, the falling wedge pattern reflects a narrowing downward structure that, despite appearing bearish, is typically a bullish reversal signal. The price must break out of the wedge for the selling pressure to be considered fully exhausted. Once that breakout happens, buyers take control and strong upward momentum often follows. That's why investors should recognize the pattern, wait patiently for the breakout, and then take advantage of the opportunities it creates. But analysis cannot be based solely on the falling wedge. Let's also take a look at other metrics. Stay tuned.
The average true range indicator, ATR, is one of the most powerful tools used in technical analysis to measure market volatility. When the ATR line rises, it signals that volatility or price fluctuation in the market is increasing. Rising volatility means that bigger moves may take place in the market, while also indicating new opportunities for investors. Especially for trend-following traders, an increase in ATR is seen as positive, as it often shows that the price may move more strongly within a trend. The stronger the price movements, the higher the probability that the market will continue in a certain direction. When the ATR line rises, it not only indicates that prices are making sudden jumps, but also shows that market interest is growing, buyers and sellers are reacting more strongly, and trading volume may also be increasing. An increase in the ATR line is often interpreted as the beginning of a new move. After periods of low volatility, the price usually tightens, and this compression is followed by a sharp breakout. The ATR line then starts to move upward after such a breakout. Therefore, a rising ATR can indicate that the price has broken out of a consolidation zone and entered into a strong trend. This trend often creates great profit opportunities for investors. Especially if the price has broken upward and the ATR line has started rising, it paints an extremely positive picture suggesting that the price may climb even higher. This is because high volatility shows that buyers are becoming more dominant in the market. While this dominance pushes the price upward, a rising ATR shows investors that the rally is developing on a solid foundation. Another key point investors should pay attention to when the ATR line rises is the psychological aspect of the market. When volatility increases, people usually make faster decisions, and these decisions cause prices to accelerate in one direction. If rising volatility is supported by an upward trend, panic buying may occur in the market. While this panic buying pushes the price higher, the ATR staying consistently elevated signals that the trend may continue for a while longer. For this reason, when the ATR line rises, it is often interpreted as a very positive signal that the price may keep climbing. This is because when volatility is low, price increases are usually weak and fade quickly, but if the ATR line is rising, it means that there is strong energy behind the move. For the price to continue rising, it is not enough for buyers to dominate the market. Technical indicators must also confirm the move. A rising ATR provides this confirmation. For example, if an investor sees that the price is broken upward and the ATR line is also rising, they may interpret this as the beginning of a larger trend. This is because when volatility increases, price movements occur in a wider range and the sustainability of the rally becomes stronger. The rise in ATR shows that the price has gained new momentum and may accelerate further on its upward path. At this point, it is necessary to take a deeper look at the relationship between rising volatility and price increases. If the price rises while volatility remains low, the sustainability of the rally is often questioned. But if volatility rises along with the price, investors tend to believe it is a strong and lasting move. A rising ATR line provides this confidence. Most investors see an increase in volatility as a strong signal that the price may climb further. Because price increases alone are not enough, there must also be strong energy and participation behind them. This energy reveals itself in the rise of the ATR. Furthermore, a rising ATR not only signals price increases, but also reflects the dynamic structure of the market. Increasing volatility shows that market participants are making more trades, more buying and selling is taking place, and as a result, price movements are accelerating. Such rapid activity is usually seen at the beginning of a trend. Therefore, if the ATR is rising, investors understand that the price is not only going up, but that the rise is developing on a solid foundation. This creates a positive expectation that the price may climb even further in the future. Another positive aspect of a rising ATR is that it strengthens investor psychology. When people see large fluctuations in the market, they usually want to join the direction of those moves. If the price is going up and the ATR is rising, investor confidence increases. This confidence accelerates buying and drives the price even higher. Therefore, a rising ATR is not only a technical indicator, but also acts as a psychological catalyst. Market participants begin to believe they can achieve greater profits, and this belief further strengthens the rally. When the ATR rises along with the price, it shows investors the strength of the trend. This strength does not mean that risks in the market are reduced, but it does signal that the upward move has become more reliable. Since volatility can also cause prices to fall sharply, risks still exist. However, if the trend is upward and the ATR is also rising, this creates a positive picture for investors. In other words, volatility does not make the price direction uncertain. On the contrary, if the price is moving upward, it shows that there is strong momentum behind it. A rising ATR line is one of the strongest signals supporting the possibility that the price may climb further in the future. This is because increasing volatility creates more room for price movements. The price is no longer trapped in a narrow range. Instead, it has the opportunity to reach higher levels within the expanding range. This allows investors to follow the rally with greater confidence. Therefore, a rising ATR is not only a technical signal, but also a factor that strengthens the price's upward potential. In conclusion, a rising ATR line shows that the price has entered a more volatile structure and that this volatility may support further price increases. For investors, this is an extremely positive signal because it proves that the upward move is developing on a strong foundation. Rising volatility becomes a sign that prices may climb further. The rise in ATR strengthens the rally both technically and psychologically. That is why when the ATR line rises, the most common interpretation among investors is that the price may continue to increase.
The formation of an ascending channel is actually an extremely positive technical analysis signal, showing that market movements are progressing in an orderly and systematic way. This type of structure tells us that buyers are more dominant in the market and that the general trend of the price continues upward. The lower band of the channel always acts as strong support, while the upper band functions as long-term resistance. As the price oscillates within this channel, it not only strengthens investors' confidence, but also indicates that the market is rising in a healthy manner. In particular, the existence of the middle band is a crucial threshold in the price's journey. The break of the middle band is often a development that clarifies the direction of the price. If the price manages to break through this middle band strongly, investors naturally turn their eyes to the upper band, because the path to a potential rise extending all the way there is now open. At this point, the break of the middle band generally represents a stage where buyers strengthen their dominance in the market. Behind this breakout may be factors such as increasing trading volume, growing investor interest, and positive news flow. After surpassing the middle band, the price often consolidates at this level for a while to reinforce it, and then accelerates its journey toward the upper band. Since ascending channels usually indicate that the market is in a healthy and steady uptrend, investors view this move as confirmation of a positive trend. Especially after the middle band breakout, the price gaining upward momentum signals a continuous climb all the way to the channel's upper boundary. The journey toward the upper band is actually one of the periods when market psychology is felt most intensely, because investors follow with great excitement whether the price will reach the upper boundary, how it will react there, and whether it will make a new peak. When the price reaches the upper band, if buyers' strength remains high, even the possibility of a breakout arises. However, most of the time, when the price touches the upper band, it consolidates for a while or experiences slight pullbacks to regain strength. Still, this journey itself offers investors significant profit opportunities. Especially if a potential increase of around 6,800% is being mentioned, it reveals how much potential the price carries during its climb to the upper band. Such a rate of increase means extraordinary profit opportunities for investors and shows how strong a trend the market is in. A potential rise of 6,800% is a rare opportunity in the investment world. A surge of this scale is perceived as extraordinarily positive, both from a technical perspective and in terms of investor psychology, because such a percentage shows that the price can be carried many times higher from its current levels. This attracts not only short-term investors, but also those with long-term strategies. In a scenario where such potential is forming, many investors try to take early positions in order to maximize the strength of the trend. The journey that begins after the middle band breakout is almost like a marathon for patient investors. As the price climbs step by step, every level tested becomes a signal of the massive increase awaiting at the end. Such a potential rise also shows that the market has a strong support mechanism, because the price being able to stay within an ascending channel proves that the buying support coming from the lower band constantly steps in. This increases investor confidence and reinforces the belief that the market can sustain its uptrend. After the middle band is broken, buyers entering the market more strongly support the continuation of this journey toward the upper band. As long as the price maintains its upward movement throughout the journey, the strongest sign is that the trend is intact and progressing healthily. From the perspective of investor psychology, the potential target of a 6,800% rise is actually a major source of motivation. This rate excites investors' appetite and can trigger greater capital inflows into the market, because everyone wants to benefit from this opportunity. As the uptrend strengthens, with new investors joining the market, momentum increases and the price climbs faster. This creates a chain effect, pushing the price to higher levels. Especially after the middle band breakout, investors' excitement rises even more, because now there is a wide open space ahead stretching all the way to the upper band. Each step in this area confirms that the price has entered a new phase of ascent. Reaching the upper band, however, represents one of the peaks of the trend. The reaction the price gives there becomes extremely critical for the future direction of the market. But the real point to pay attention to is the journey itself, because the uptrend that began with the middle band breakout has already delivered significant gains to investors. If the journey to the upper band signals a 6,800% increase, the gains obtained along the way further strengthen confidence in the market and investors' faith in the future. Such a scenario carries great meaning not only from a technical standpoint, but also from a fundamental analysis perspective. Because behind a rise of this scale, there must be a strong story, continuous news flow keeping investor interest alive, and long-term growth expectations. Technical analysis shows how the price will move within the channel, while the underlying dynamics reinforce investors' confidence. Ultimately, the ascending channel structure proves that the price is in a controlled and healthy uptrend. The middle band breakout, on the other hand, becomes the flare signal that this journey could continue all the way to the upper boundary. In summary, the price moving within an ascending channel, breaking the middle band, then setting out on a journey toward the upper band, and this journey carrying a potential rise of 6,800% is one of the strongest and most positive technical analysis scenarios in the market. For investors, this picture means an opportunity to achieve extraordinary gains if they hold their positions with patience and confidence. Every step of the movement that begins after the middle band breakout confirms the continuation of the uptrend and proves that the price is progressing toward the upper band. Thus, the market gains strength both technically and psychologically, investors' confidence grows, and the journey toward major targets continues more firmly.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analysis, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.